This drop is different. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive drop that took place last week on Bitcoin and why that drop is fundamentally and technically different than every single other major drop that we have seen so far this year. Many people are worried that this may be the beginning of a new miniature bear market before we enter into the bull market post-halving. And so today, we're going to analyze the differences between this drop and the last drops that we've seen and why I believe volatility is coming. Is that drop going to be bullish? Are we going to see another major drop before a resurgence in buy pressure moving into September and October? We're going to discuss all of that and more in today's episode of Climate of Crypto. So without much further ado, let's go ahead and dive right on into it. The story starts with inflation. At 8:30 a.m. on August the 10th of 2023, Bitcoin was expecting a drop on the CPI. But instead, CPI on all items moved from 3% up to 3.2% for the first increase on CPI in over a year ever since the rate hike started bringing inflation under control. This happened for a number of reasons. I've spoken about it in previous videos, but briefly, we have seen a massive onshoring of the petrochemical sector into the United States. That has led to inflation in the economy because we've had more build out and more jobs created, but it's also led to lower prices on petrochem, which has led to the energy component of CPI being very, very negative. As a result of that, we can see energy currently is being reported as a negative 12.5% inflation, otherwise known as 12.5% deflation. All items less food and energy is still sitting at 4.7% and has been much, much, much harder for the Federal Reserve to contain. As the last 12 months worth of energy data rolls off and we start to see increasing prices once again, we have and we will continue to see the deflation in this energy category disappear and switch back to inflation, which will lead this inflation to move higher. The market wasn't ready for this. On Thursday, August the 10th, when this data came out, everyone was expecting that we were going to see another drop on the consumer price index. If you're watching this channel, you know that that was not going to happen because we've looked at the chart before that shows that the highs of gasoline prices are now over a year old, which means we're dealing with lower data from the 12 months ago data component of CPI, which means that we're going to start to see inflation rather than the deflation that we've seen so far in that category over the last year and a half. That means that all items is going to necessarily move up closer towards that 4.7% that core inflation is sitting at, with many exuberant about the possibility of another CPI drop down into the 2% target range, meaning that we could see a plateau in effective federal funds rate, meaning that we're one step closer to a rejuvenated investment in the economy by the Federal Reserve. People went long, bought the market, expecting that CPI was going to drop, which would lead the market even higher. When that didn't happen, Bitcoin dropped off a cliff. Now, CPI coming out as a positive and moving to the upside was not the only reason that Bitcoin dropped through this level. Following the CPI drop, Bitcoin moved very close to this uptrending level of support, and eventually it just was not able to hold it because it would have had to find some bullishness to not fall through it, and since that wasn't the case, the path of least resistance was for the bears to take over and drop us even lower. Remember, the trend is your friend until it ends. This trend had not ended, so we continually stayed on the side of the bears as much as we want to be bullish. But why is this drop technically and fundamentally different than the ones we've seen so far this year, and what does that mean for the next 3 months of price action? Well, obviously, this is the break of the one major uptrending level of support that we've used to define all of our market structure. Bitcoin is now in uncharted territory and must redefine everything. On top of that, Bitcoin has fallen below the 200 daily simple moving average, one of the most important moving averages in all of Bitcoin. This moving average underpinned and guided the entire 2016 and 17 bull market, and then did the exact same thing here in 2020 and in 2021 as well. The 200 daily simple moving average is the defining moving average for defining whether the market is in bullish territory or bearish territory. But that's not all. Exactly 24 hours before Bitcoin would fall below the 200 daily simple moving average, Lux Algo, as always, was giving us an early warning sign with a sell signal. The next day, we would see trend catcher confirmation with a take profit for this sell signal sitting below 26,000. We would hit that within 48 hours. But the tricky thing is this sell signal is a little bit different than the other ones that we've seen so far this year. These sell signals took place so close to the bottom that they weren't even very relevant. These sell signals took place at the beginning of the correction. This sell signal took place towards the end of what we thought would be the correction, and then was also followed by a precipitous massive crash. So not only has Bitcoin precipitated a massive crash, We also have a sell signal that seems to be fundamentally different than the ones that we've seen so far this year. And going out to the longer term charts gives us the perspective that we're looking for. On the weekly chart, you can see that we've now also seen a sell signal. It has not been confirmed. We have not had trend catcher confirmation, but Bitcoin is below the trend catcher and just above the 200 weekly simple moving average, which has served as a baseline for Bitcoin so far this year, indicating that we've been in the pre-halving phase of the bull market. If Bitcoin falls below the 200 weekly simple moving average and below 25,000, then it is no longer in the pre-halving phase of the bull market that I define starting at 28,545. We're already $3,000 lower than that. Furthermore, if you look at the monthly chart, we did manage to bounce a few months ago in June, around June 15th, when the BlackRock ETF was announced, off of the red trend catcher on monthly chart Lux Algo. Right now, it looks like we may be falling below that trend catcher as support. We also see the most significant bearish MACD candlesticks that represent the distance between the MACD line and the signal line on MACD that we've seen ever since the major market drop over a year ago in June of 2022, when we first fell back down towards $17,000. On top of that, this is the first time that we've seen RSI drop below 50, and we moved below the 14 simple moving average. On the monthly chart MACD, we did see a bullish MACD cross just back in June, but that is now converging bearish, and the RSI this month has dropped below the 50 level, down towards the 14 simple moving average. Every single one of these are short-term and medium-term bearish indicators for Bitcoin, but is crypto winter here to stay, or has volatility returned? To answer that question, I think you need to look at the weekly chart Bollinger Bands. Something you'll find if you look at the Bollinger Bands on the weekly chart for Bitcoin is that almost every single time we see a close call, a close encounter of the Bollinger Band kind, we see a continuation of the trend. Here we saw a convergence. Bitcoin managed to rally following the trend that had preceded it. Here we saw convergence. This completed the trend to the downside, completing the bear market. Same thing happened here in April of 2022 as well. As a general rule, when you have tightening Bollinger Bands, that means that you're trading sideways, which means that you're probably in a continuation pattern, which means you're probably going to move in the same direction that you started. And this is the good news. These are some of the tightest Bollinger Bands that we have seen in a very long time, and they are following 8 months of rally, indicating that this whole movement here is one massive consolidated movement that will hopefully lead us to the upside. On top of that, if you keep in mind that an ETF is almost certainly going to be approved for Bitcoin within the next 2 to 3 years, probably not the next 2 to 3 months, let's just be honest. And the fact that the halving is coming up in April of next year, we are likely to see a major rally coming in the last part of this year, moving into 2024. But is there going to be a major crash first? Is the winter continuing? More than likely, since Bitcoin has come so close to $24,723, the bottom that we set on June 15th before BlackRock announced that they were going to be filing for a Bitcoin ETF, that's the bottom that we set. I think that Bitcoin is going to have this kind of gravitational attraction and come down and test this level. If we fall below 24,700, then we're probably going to 22,808. 22,808 is a level that we set back here in September of 2022. Another level to look out for below that is $21,344. If you want to trade any kind of short or long, then I would encourage you to basically just set up a trade right beyond the level after you confirm you've broken it, and then use a trailing stop loss. It's really that simple to be able to trade these movements. Ultimately, there are many bearish forces in play right now, and because Bitcoin is in a major correction, I have to side with those bears. But I am an optimist, and I do believe that the bulls are going to come through in the next several months. And so we will be looking at these levels as buying opportunities. And if you're interested in knowing how to invest in the Bitcoin market and make the most out of the technical analysis that we are doing here, make sure to check out Club DeFi. That's where we teach everything about technical analysis. So make sure to check that out with the link in the description box down below. In short, we are in a major correction, and at this point, it does look like that correction will continue. There's one ace up our sleeve, though. That'll be the fact that for at least the time being, there is bullish RSI divergence showing up on the daily chart, where we have higher lows on the price action, lower lows on the RSI, and we are massively oversold. So oversold, in fact, that we are at the most oversold point on RSI ever since the pandemic. From that level of being oversold, Bitcoin would rally 1,500%. So while the winter has been very cold and the volatility has been very boring, I believe that Bitcoin is about to rise from the ashes like a phoenix, and we're going to see a continued rally on Bitcoin moving through the rest of this year on into 2024 as we prepare for the halving, and as interest rates start to plateau, as inflation starts to become more of a non-issue for Bitcoin, and people start to realize the value in Bitcoin in a way that they never have because of the instability going on in the global economy, leading them to an asset that turns manipulatable economic and monetary policy into natural law that cannot be changed. If you want to become wealthy, the most surefire way to do that is to continue to dollar cost average into the markets, not just the crypto markets. Not a bad idea to have some in the stock market as well. Make sure that you're dollar cost averaging every single week or month into Bitcoin, Ethereum, and some kind of S&P 500 index. If you do those three things over time, you'll become very successful. And at the same time, continue to follow the charts daily, because there are always trades showing up down there on the shorter term time frames where you can make a lot of profit to be able to fund that dollar cost averaging activity. Also, don't forget about Lux Algo. It's a wonderful technical indicator. I think it's great. If you're interested in it and you're interested in what you saw today, you can sign up for it using coupon code JEB30. That's 30% off at checkout, and that will help you to get an indicator that is really going to help you down on those shorter term time frames when you're trying to do trading, again, to fund those accounts or just to live off of. It is a wonderful technical indicator, and it's going to be invaluable in your trading. So make sure to check that out with a link in the description box down below. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.